Good evening, ladies and gentlemen. Now that the introductions have been done, let's get started with this panel discussion. The panel discussion is on capital markets, growth challenges and the future ahead. Now, ever since demonetization has happened, a lot of money has come into the system, and suddenly financial markets and financial products are up in the interest of a lot of investors who had traditionally invested their wealth in fixed assets and immovable property. So is the community, the capital markets community, now sensing a godsend opportunity to grow their business and give a bigger impetus to the capital markets? My first question, of course, is to Mr. Bhatnagar. How can the industry capitalize on this opportunity? Is it really a godsend opportunity that we are seeing greater financial inclusion, we are seeing more digitization and more of the wealth now coming into the banking system? Is this just good enough for now people to start looking at capital markets and products available? Will they automatically look at that, or does the industry need to do more? Give them something maybe more bait so that they really do think of capital markets. Maybe now that the system is, the money's in the system, maybe they still go back to the same products they invested in earlier. How can the capital markets capitalize on this opportunity?
I think some amount of shall I say, compulsive conversion into capital market products has already started happening. I think that was one of the green shoots that we had identified as a, as one of the outcomes of demonetization quite early on. And one must have noticed that there is a continuous inflow into the mutual funds through the SIP, and the inflows into the mutual fund schemes continue to grow. Of course, the fact that the so-called idle cash having come into the banking system in an environment where there may be lesser inclination to keep the money in simple fixed deposit products, and combine it with the fact that many of the RMs and the wealth managers have become hyperactive because of the the rise in the deposits that they have seen over the last couple of months. There, I think, is there is already an initiative by bankers, by wealth managers, by brokers, by the insurance people, community, to capitalize on this one-time blip, if I may call it, that is visible. But I think the broader question that you are asking is more about deepening. The broader question that we all want to get our head around is about the future, and how much of the growth that is possible as a potential from the India retail that we have all looked at it for the last 15 years can now be converted. So when you start looking at that as a bigger canvas rather than this as a one-time, shall I say, opportunity, you need to start recognizing the possible connectivity that may come about because of move away from shall I say, a cashless or a more cash society to a lesser cash society, and whether that connectivity will lend itself naturally, organically, to allow a better penetration into the semi-urban, smaller towns, far-flung areas, because there should be a policy push to connect the man in Northeast through a banking ATM or through such products that have been identified as the weakness when we were in the midst of the demonetization, right? So there were a lot of weaknesses that came up, and I'm sure many in Delhi have recognized it. If that becomes the approach that will be addressed, then I think we are looking at a larger opportunity for people sitting in this room to recognize as a potential to push the financial products. And that, I think, is something that we should all start perhaps talking about it today, or start looking at it closely.
So, Mr. Relly, how is this going to happen? The Jan Dhan accounts have been opened. financial inclusion is the government's big policy goal that they have. Mr. Bhatnagar is saying that you need to reach out to everybody. So now, as a first step, we're seeing post offices, banks, reaching across, getting accounts open, and soon they will become active. So is the industry then going to tie up with banks, post offices to then take the products to the end customer, or will you do it on your own, set up your distribution network? Is it cost effective? Will it make sense?
So I think the existing channels are already underpenetrated. We are talking about developing the new channels. We haven't yet used the existing channel. Like I represent HDFC Securities, so we have a distribution network of HDFC Bank which we haven't yet leveraged to the potential. Similarly, I don't think so other banks and other brokerage houses have leveraged the existing distribution channels only. Coming back to the point whether we need to innovate or not, I definitely feel that we need to reach out the customers, but may or may not be through the brick and mortar channel. We need to definitely leverage the digitization. So most important thing is that today we have a better penetration of smartphones. Already about 35 million kind of customers are using the smartphones, and information access as well as execution of transaction both are available with the customers. So if we ride on the digitization, we would get much more wider penetration in the equities and related products. Just going back to the point of demonetization, and what I feel that what demonetization brought on the table is that the excess CASA and deposits with the banks force them to reduce the deposit rates. When you have a very low deposit rates, investors are forced to look at the alternate options. They're not happy with these 5%, 6% kind of returns on their investment, and in fact when they look at real returns, there are hardly any real returns also. So to that extent, there is a TINA factor, there's no alternative. They got to look at some or other products to get closer to double digit returns which they are used to, and that's where this is a opportunity for us to go and give somewhat lower risk products to our customers. May not be very high risk products, but somewhat lower risk products, and that's what Ravichandran also mentioned, that we should be covering the wider basket of the products rather than looking at only direct equities. So to that extent, I think we should be leveraging the existing channels and digitization.
So Mr. Relly has raised many important points because he said now the money's in the bank, it's all digital. I have a phone and I can make a transaction. I can transfer my money, I can open my brokerage account, I can buy and sell securities. But why should I do it? 2008, I burned I'm scared of the risk. My capital got eroded. I feel that capital markets are risky because it's a big boys club where only the larger FIIs move the markets up and down, and the smaller players get their fingers burnt. Does the broking community, like Mr. Relly also mentioned, come out with products, differentiated products, customized products, where the investor feels confident about having made that transaction if it's so convenient for him?
I think before I go into that point, I think I'll just want to make one more point is that I think we are looking demonetization in isolation, but I feel that the financial inclusion program which is going under in this government will change the life of this country, in my opinion, over the next 10-20 years. We have suddenly had 40% of the population which was not even part of the formal banking system is coming into it, and I think so far they did not have access to any financial product whatsoever, and if at all they had access to some informal segment or chit fund kind of setup, and they were kind of exploited, and so I think in my opinion there are lots of trends which are emerging at over next 8-10 years, and broking community and financial services community has to gear up to that. And there are, we'll discuss those trends, but coming to your point of big boys club and small investors getting sort of raw deal, I think it is a lot to do with, in my opinion, about investor awareness. People who have invested into asset classes over a longer period of time have not had that experience. Unfortunately, I think, unqualified people end up investing on a wrong advice in unsuitable assets. And partly, obviously, financial intermediaries have a role to play, but, and that's the reason I think SEBI and exchanges have a huge amount of program going for investor awareness. But I think still it is, we have to admit the fact that financial literacy in this country is very, very low. Not only low, literacy is low and financial literacy is even more low. And we cannot have in that kind of setup, a direct equity investing going up in a big way. And I think as an alternative to that, we have seen SIP taking a big shape, and I think it's a very, very encouraging trend that money should be left to the investors who are qualified to invest. A retail investor at best can invest based on some unqualified tips. And in the process, obviously, he's not going to be able to take care of the cycles. He's not going to take care of a lot of other stuff. So, it's not about big boys club, and I think so. And that trend is a very, very happy trend. So, in my opinion, broker's role will change from only transaction-oriented services to advisory-oriented services, advisory across asset classes, advisory based on the risk-return profile of the investor. So I think that is a very, very big trend, and I think lots of members out here are kind of taking benefit of that. It's a very, very big trend. So in my opinion, only transaction-based model will not survive, and we'll have to invest a lot on that.
Right, Mr. Bansal, Vikas Siha is saying that investor education, greater information, a connect with the end investor is important. Who is this onus on? Who is going to educate the potential investor?
So I think it's a role for the ecosystem. We are all part of the ecosystem, investors, the market intermediaries, the regulators, I think society at large. You look at as Vikas rightly mentioned on the financial literacy part, I think it's something that not many engineers were qualified from engineering colleges are aware of financial products. And so it's not a question of whether they are literate or not. It's a question that whether financially they are aware of the risk reward which comes in. So everyone likes to make the maximum amount of money, but do they know what kind of risk are they taking? And is that fairly balanced in their mind is a call that everyone has to make. So I think fairly we are seen to be still a society which loves physical asset, and let's admit it. I think financial inclusion has helped in a much significant manner. I think somehow our love for physical asset, be it gold or be real estate, is slightly waning for whatever reason, because either that's not returning enough or maybe they're not much juice left right now. And I think if you really look at the investor profile today, at least I can talk about the most of the high net or the ultra high net families, they are over invested in real estate. So today the disconnect is not that whether to invest in equities. The disconnect is how do they get out of real estate to do something else. The physical asset, love for physical asset for whatever reason, because we have been largely a high inflation society, so we can't really tell them that they were wrong. In fact, they have made more money in that. So on one hand, they were financially illiterate, or maybe they didn't have much access to financial product. On the other hand, physical asset were rewarding for whatever structure high inflation market India was. So I think we are somewhere still in the neutral zone. I won't say that we have completely taken our minds off physical asset. The second challenge, obviously, is that we look at every investor from single lens. So retail investor, ultra high net worth, sophisticated investor is being still looked at from the same regulations. If you see globally, investors are classified based on what kind of sophistication they have. If you go to Singapore, there is a clear definition of sophisticated investors. If you go to US, there is a definition of accredited investors. Somewhere you call professional investors. Now, what does this investors means? These investors are they are in a category where they can understand the risk-reward metrics very well. And which means they can be exposed to little more sophisticated financial product with significant amount of innovation associated with it. So most of the investments happens in the sophisticated investor, accredited investor category, and over a period of time, that actually percolates down to the you can say mid-market investors and then the retail investors. Because as product cycle matures, as the risk-reward spectrum matures, you see the funnel. I think somewhere because we do not have the classification between risk, the retail and the sophisticated investors, the funnel for innovation here itself is getting blocked. And to an extent, we don't see that level of innovation happening here because we are still being seen by the same set of prescriptive methodology which you generally need to have it, and that is required for retail investor protection. So these are a few areas we need to do that. But I think the biggest thing we need to do, and I think each one of us have a role to play, be it a financial intermediary, be it an investor, be it our own family and society, that we need to create a larger ecosystem for financial literacy. And financial literacy does not mean merely knowing banking, how to do banking, how to do mutual fund investment, how to fill up the form. I think that financial literacy has to somewhere bring the risk and reward somewhere in the discussion. Somehow that's not happening.
Mr. Relly, Mr. Bansal spoke about how some people invested in real estate because that was in an inflationary environment a good way to generate wealth, and now they feel stuck. What products can be offered to this kind of investor so that they look at the capital markets more favorably? There is a TINA factor, maybe other assets are not as attractive, maybe that's a good reason to look at the capital markets, but how can you lure them or give them those innovative products so that they want to invest in the capital markets?
I think first of all, investors need to understand that they need to sink and swim with the market when they are entering into the capital market. And only when they have an appetite, risk appetite and the time horizon with them, then only they should enter in the market. It's not the gambling. Traditionally, Indian investors, whenever they look at long-term horizon, they are parking their money in, or investing in debt instruments or real estates. Whereas whenever they have a short-term funds with them, they are trying to play in the market and more speculation and more gambling. So we'll have to first get rid of that kind of a mindset and share with the investors or prospective investors that, look, this is the one avenue which you can use to create a long-term wealth, and you have to invest and stay invested. A plain vanilla ETF product can be good enough to participate in the market for them. And if at all they are looking at timing the market and they are worried about whether is it the right time to enter in the market, that's the question every investor asks. So there are ways available to just start the SIPs in the ETFs and so on. So there are various instruments which are available. Some more of innovation or some more customization can be done depending upon the existing asset classes they own and the risk appetite they have. So there are ample opportunity available to help the customers or investors to participate in the capital market.
Right. Mr. Bhatnagar, point was raised on how products can be made available, and Mr. Bansal also said that we need to create financial awareness. But for the broking industry, we've come to a time where there's a lot of competition amongst the brokers. So while there is a part of the onus on the broking industry to do the heavy lifting when it comes to investor education and reaching out to investors to make them understand what the risk reward matrix is. We come to this point where there's intense competition on getting more investors, on bringing the brokerage down, increasing the turnover.